this opportunity, I request C. Chinasitaram Reddy Garu to kindly come on the stage. Taking it forward, I would request C. Deepak Ladda to kindly come on the stage. May I request Chairman Hyderabad branch, Satish Garu, to please come on the stage. When we all were discussing how to take up this subject, ESOPs, and we thought we have one gentleman, our past chairman, Sri Pankaj Trivedi Garu. I request you to kindly come on the stage. He is the only person or one of the best person who can satisfy us and comply all these regulations and also help us in clarifying all our doubts. So taking it forward, without wasting much of our time, because it's raining time, again, we all have to leave early also. So cut shorting many of the things. I would request Chairman Hyderabad branch, Sri Satish Garu, to give a sapling to Sri Pankaj Trivedi ji. We welcome you, Pankaj Bhai, to your branch, to our branch. And after being so much of rainy evening also, you have been here taking out your time. It's so nice to see you here. I would request Chairman Hyderabad branch to give an overview about today's program.
Thank you, Girdhari sir. Respected Speaker of today's evening and past chairman of Hyderabad branch, CA Pankaj Kumar Trivedi, and all my management committee colleagues, including past chairman CA Deepak Ladda Garu, Sikasa co-chairman Girdhari Toshnewal Garu, and managing committee member ACS Reddy Garu, all the members, a very warm welcome and very good evening to all of you. On the request of members through their phones or what do you say, mails, we are organizing actually this meeting. The intricacies of the problems and a lot of SSCs getting notices from department, and everybody is wondering where to go and how to address the issues. Even though it is a ESOPs program, SSC will be getting benefit, but when they are paying taxes, it is little bit pinching them. So we thought of arranging a program for today evening, and when we requested Pankaj sir, he kindly accepted to address all our members. Thank you, Pankaj sir, for giving your time and valuable opportunity to all the members. As I told by Girdhari sir, to be honest, we are not so expert in the subject, so I don't want to stand in between you and the speaker. So I request the next proceedings to be taken over by ACS sir by introducing today's speaker.
Thank you, Chairman sir. It is my privilege to introduce today's speaker, past chairman of Hyderabad branch, Pankaj Kumar Trivedi. CA Pankaj Kumar Trivedi, graduate from Badruka College of Commerce and Arts, Hyderabad in 1986 and qualified as a chartered accountant in January 1989. He is a founder partner in the firm named Trivedi and Bank. He was a managing committee member of Hyderabad branch of SIRC of ICA from January 2016 till March 2022 and served as a chairman of Hyderabad branch in the year 2020-21. Team Hyderabad branch won award at national level during his tenure as a chairman. He served as a vice chairman in 2019 and treasurer in 2018. He was chairman of Sikasa in 2000 and 2017 when Sikasa won the award for its performance. He was also committee member of Hyderabad branch of SIRC of ICI from 1998 to 2000. He was regularly co-opted as a member of various committees constituted by ICI at central, regional, and branch level. He is a panel speaker in various institutions and has regular presented papers for Hyderabad branch and SIRC of ICI on academic interests. His main area of practice is payroll accounting, ETDS returns, personal taxation, and is consultant to various multinational companies. He is a keen follower of cricket and loves to listen soft Hindi songs. He is also a theater artist and has also acted in 2 short films. This is the brief profile of today's speaker, Pankaj Kumar Trivedi, sir. Now I request take it forward the session. And I will welcome past chairman of Hyderabad branch, CA Banu Narayan, sir. Yes, sir.
Chairman of the branch, Satish Mailavarpu, past chairman Banu Narayan Rao, immediate past chairman Deepak Ladda, managing committee member ACS Reddy, Girdhar Toshniwal, several seniors and young friends present here. A very good evening to all of you. Yeah, I love cricket and I enjoy the thrills attached with it. And I think today was no less for me. Morning, someone called from the branch and said 125 registrations. So I left everything and I started studying. I said 125 registrations, I can't do anything. So by the time I came out and saw at 2 p.m., I saw a lot of clouds. Then I said, TK, 25 could be the number. And I called Satish and said, shall we cancel it? He says, 4 o'clock, Anna. Sharp 4, we will decide what to do. And to my luck or bad luck, the sun was smiling. And I said, Satish, let us do it. Then I came here, we were discussing, and when we came out, it was heavy rains. So we are thinking that it's only for chairman, ACS. So only 2 attendees were there. What is to be done? And then luckily my friend came. Sorry, I don't know your name, sir. Sushil. So I think when Sushil gar came, I told Satish, don't worry, Satish. 1 member has come. I will give the same commitment, same passion for that 1 member. And we know that it's raining, so it's difficult for members to come. But frankly, my expectation has been increased 20 times because I see more than 20 people sitting here. So thank you very much. Now, employee stock option plan. Yeah, it's a very hot topic today, but I don't know how many of you are aware of it, that ESOPs became a very popular subject matter of discussion because of Infosys Narayan Murthy garu. What he did was, to all the plumbers, electricians, carpenters who worked for Infosys, along with the payment, he started giving some shares. They didn't know what to do, but they didn't have that much dare to say, Narayan Murthy sir, that we don't want this paper. Somehow they took the paper, kept it, and the distribution of those shares were a vision of Narayan Murthy sir to make some 200 Indian millionaires. And all these carpenters, plumbers, driver, and workers who worked for Infosys, very soon they became millionaires thanks to ESOPs which were granted to them by Narayan Murthy sir. Now, a lot of developments happened since then. And now ESOPs have become a very popular tool. One is when you talk about ESOP, it is a great reward being shown by the company towards the loyalty displayed by the employees, the hard work. Yes, when we start, everything is not that good. So increments will be stopped, costs will be stopped. But this ESOP has come as a great reward for them. And now every startup, every company has started using ESOPs for the simple reason, in the days of cost cutting, you don't have to make immediate payment. And even at a future date, you don't have to pay anything because the markets will take care. If your share is listed, then the company is not paying the money, but some buyer is paying the money, which you are getting as a good bonus. So that's how ESOP started becoming more. And I think our Vodafone, because wherever you go, we follow is the thing for Vodafone. So I just changed Vodafone to income tax department, because whenever incidents happen like this, income tax department follows. And now income tax department also became Vodafone and started trailing the people who are getting ESOPs and all. And the taxation of ESOPs became much more important, much more relevant with the introduction of Black Money Act in 2015. From 1st July 2015, the Black Money Act was also passed, which came into force from assessment year 2016-17, and ESOPs become popular. So friends, today, we are not discussing this from how the ESOP scheme is done and all these things. I'm just avoiding it. I'm purely concentrating on the taxation of ESOPs, the responsibility of employer, the responsibility of employee, and then going forward, the Black Money Act also we'll discuss. The topic is complicated. So the best thing what I thought was that I'll keep my PPT simple. So that's why you don't find any colors and all in my PPT. It's a plain PPT. White and black is what you see. And that's my intention, how we would like to take up this topic. So the agenda, I'm slightly going into detail with ESOPs because I've seen that there's a lot of confusion with respect to vesting date, exercise date, what is the plan, and also pardon me if I'm too childish or if I'm going very slow, trying to go very deep, but I thought it would be better if we discuss everything about it, as it's a big market down the line for all of us. So we'll just see what are the type of equity ownership plans, what are the important terms that are connected with ESOP, and what is the taxation of these ESOPs is what we are going to see for all the categories. Then what are the obligations for employees and how you do the tax saving from sale of ESOPs and all. Going further, let us try to understand the Black Money Act, simple terms which are connected to ESOPs only is what I'm going to deal with. I'm not going into total Black Money Act, but what is connected to this ESOPs is what we are going to see. Penalty for non-disclosure, because a lot of people are talking about 10 lakhs, 10 lakhs, 10 lakhs. I'll come to the 10 lakhs. I'm sure 10 lakhs is not 10 lakhs. It could be much less or much more depending upon the situation. We'll see about it later on. First, let us try to see it in a simple way. Now, when we talk about employee stock option plans, these things are done in three ways. Three ways are most popular here. There are, of course, some more things which I'm not touching, where there's a cash payment straight away, so it's taxable. I'm not touching that. So the three most popular things which we see are, first, the restricted stock units. In the restricted stock units, when the company gives restricted stock units to an employee, what happens is it is purely based on the term for which the employee has worked with the company. Now, a company enters into agreement with an employee saying that you are getting, say, 100 shares, and after every year, you keep getting 20, 20, 20 transferred in your name, provided you work for us. So when an employee is just supposed to stay there in the company and work, We call it as RSUs, or restricted stock units. And the most important thing what we have to look here is that the employee is not paying any amount. He is just working there for 1 year or 2 years or 3 years and is getting the shares. Then the second thing what we see is employee stock option plans. Here, what the company does is on a pre-given date, at a predetermined price, you are given an option to buy shares. Now, if I am owner of the Infosys and Sushil Garu is working with me, I will tell Sushil Garu, I will be giving you Infosys shares 1 year down the line at say 1,500. So here what is happening is we have predetermined price, we have predetermined period. So first thing is Sushil Garu has to stay there for that 1 year. And then after 1 year, Sushil will definitely see what is the price of the share. If the price of the share is 1,800 or 1,900, whatever it is, he will definitely take it at 1,500. But if the price of the share is just 1,200 or 1,300, he has every option to say, I don't want the share, you leave it. So here in the employee stock option plan, what happens is there is no payment given now, there is no payment taken now, except a commitment that at a predetermined price on a particular day, the company will be allotting him so many shares. So unlike RSU, where you have to just stay, in ESOP, you have to not only stay, but you have to pay that predetermined price and then get the share. This is the most important difference what we see between RSU and ESOP. And there is an employee share purchase plan also. Many companies follow the employee share purchase plan. In the employee share purchase plan, what happens is the company gives an option to me. Do you want to take the shares of our company? And if I'm interested in taking the shares of the company, every month there will be a fixed amount which will be deducted from my salary. So there will be a salary recovery which is towards the employee share purchase plan. And at a predetermined period, what the company does is, depending upon the money received from me, at a discounted rate, they will just allot me shares. General discount being offered by several companies I have seen is 15%, but there is no such rule. You just give it 15%, 20% or 10% depending upon the company. So first RSU, I'm just staying there. I don't have to pay anything. No further action from me. ESOP, what is happening is we have just discussed that at a future date, I may or may not take a price and may not buy a share. But in employee share purchase plan, every month I have started contributing. The company is taking the money, and after the say 6 months or quarter, depending upon the company, I'm just saying 6 months because it is a general practice. After 6 months, at a discount price, the shares are allotted. So here, everywhere there is an action happening. So when is income tax coming to picture? This is where a lot of confusion is happening. That's why I wanted to tell you more about RSU, what happens, ESOP, what happens, and ESPP, what happens is what we are trying to say. Yeah, it's almost same. Security and all are same. Okay, the different type of shares. So now, just roughly what happens is a company, okay, when we sell the share, when we get into tax, the common things what we know is he has sold the shares, he has purchased the shares. We see about sale consideration, we see about cost of acquisition. Though sale consideration is clearly available to us, cost of acquisition, you will have to think and then derive. That, and you'll never see a word cost of acquisition very straightforward. But the words what we are going to see here is grant of shares, vesting of shares, exercise of shares. So these three words is what we have to clearly understand. And if you are able to understand these three terms clearly, based on what we heard about RSU, ESOP and ESPP, I'm telling you, it's very easy to crack this particular thing. So here the company has a role in grant of options. The company grants the option. Based on the grant of option, at a predetermined future date, there will be a vesting date. And then for some categories, there could be an exercise date also. And after exercise, the role of the company is over. The employee has become the owner of the share, and then company has no role for subsequent sale of shares. I'm going to retract my sentence shortly. That's why I'm using the word, the company has no role in subsequent sale of shares, but the company has a role in sale of shares. I will come to it later on. Okay. So let us just see. Let us understand these terms. As I told you, I already apologize for trying to be very basic in this. The intention is only that we become clear. Now, let us look at the important terms and how these things differ for both RSU, ESOP, and ESPP. Now, the first date, what you generally see is the grant date. Now, this grant date is nothing but the date of agreement to give the shares or options at a future date. See, what is happening today is that it's only an agreement being entered. There are a lot of conditions attached. So today, I have entered into agreement to buy Charminar, but I have not bought Charminar, nor I have given any money to anyone or so. So as far as grant date is concerned, it has got no value for income tax purpose. Many employees, when you ask, do you have the shares? Yes, I have 100 shares. Most of them are not understanding the difference between the grant and the actual ownership. So what I would like to clearly mention to all of you is that grant date has no importance. It is only an agreement where you offer either RSU or ESOP or ESPP. Now, we also have to see vesting period. Many times, many of us in the beginning years were thinking vesting date is the ownership date. But no, vesting date is also not the ownership date. So we need to see the vesting period. So what happens is for RSUs and ESOP, the waiting period between the grant date and the vesting date is the vesting period. So I have granted you some ESOPs and you are going to get the ownership, or you need to act for the ownership at a later date. So that is the vesting period. And it could be, as I told you, time-based, or it could be payment-based. When you talk about RSU, you're talking about time-based. When you're talking about ESOPs, it could be payment date. And again, I want to tell you, vesting period has got no importance, nothing, no relevance as far as tax treatment is concerned. So ignore grant date, ignore vesting period for our tax calculation. And now we come to the most important item, vesting date. Now here, vesting date for RSU, ESOP, ESPP, we'll see separately, because this is the first time where the taxation is hit. Now, RSUs, if you remember, I told you that you are working for 1 year, 2 years, 3 years, after which you are getting the shares allotment. So here, the date on which the employee becomes entitled to own the stated number of shares is the vesting date in RSU. So I granted 100 RSUs to Deepak Ladda, and I said every year, say this year I did, and I said every year on 1st April, you are getting 20. It's a RSU. Deepak Ladda is working. So 1st April 23, if he is working with me, 20. 1st April 24, 20. Like this 20, every year I have granted. So on the first ownership for him comes on that date where he's become owner of the 20 shares. And when he became owner of the 20 shares, that's where the taxation hits. So please understand and be clear with one point. When we are talking about RSUs, where you are not going to pay a single amount to the company, just being there, you are getting ownership of the shares. The day you get the shares, that day is your ownership of shares. And that day, your taxation starts. But can it be said same about ESOPs? In ESOP, again, what happens is, on that day, I had told, like I gave an example of Sushil. I said, Sushil, you have an option to buy my company shares at 1500. And if you want to buy the share, I am giving you a time from today to next 30 days. Kindly pay the money. Exercise. You can exercise the thing. So the moment when Sushil pays the money, he is exercising the option to buy. Sushil has got every right not to pay the money, not to exercise the shares. So when we come to ESOP, where a payment has to be done, only after the payment is made by Sushil, I become the owner of the share. Most of us, including several assessing officers, are simply going by the vesting date, even in the ESOP category, which is wrong. Sometimes the vesting date happens on 15th March. The period is by 15th April, he can exercise. He's exercising on 15th April. But what is happening is, Sushil says, okay, I got it on 15th March only. He is declaring the shares, which is wrong, because till you pay the money, you are not the owner. There is only a commitment. So for ESOPs, the exercise date, when you exercise the option, then only you become the owner of the shares. So for RSUs, the vesting date is important, but for ESOP, vesting date has got no relevance. It is the exercise date when you become the owner of the shares and you are supposed to pay the tax. So we discussed about the vesting period, vesting date, exercise period, and exercise date. As far as employee share purchase plan is there, it is not so complicated, because the plan clearly says every 6 months, the company is allotting you so many shares at 15% discount. So every month, suppose 20,000, you are contributing. Again, friends, I would like to tell you very clearly, this 20,000 which you are contributing towards employee share purchase plan is not your ownership of any shares, because it's only a advance sort of payment. You can, in our terms, we call it a share application money. So every time you are just contributing money for the purchase plans, and the moment 6 months is over, they see, okay, 1,20,000 is what you have contributed. What is the market value today? If say 200 is the market value, 200 less 15% discount, 180 something 30 rupees, 170 is the share price, 1,20,000 divided by 170 is what they allot you. And those shares which are allotted at after 6 months, you are the owner of that shares. So we need to be very clear with the type of shares and the day on which we are becoming the owner of the shares. Once we are able to again take it, friends, the last complication which we need to follow here is when the tax thing comes into picture. First, that there are two types of taxation. See, one is when you become the owner of the shares, you get certain income. And once you get the income, taxation hits. So we have seen RSU has got a different ownership date. ESOP, ESPP has got different dates. And on the day you are becoming owner, taxation hits you never before. Now here, the taxes are generally at two stages. The first stage is at the time you become the owner of the shares, which could be vesting date or exercise date or allotment date. Depending upon what type of equity you are getting, on the date of ownership, there is a taxation which is going to be hit. And also the taxation for you on the same amount of shares will come when you actually sell the shares. The first stage taxation will be taxation under the head of salaries as perquisite, where it is the responsibility of the employer to deduct the tax and deposit with government. So the first stage, even if employee doesn't have knowledge about the ESOPs, ESPP, etc., he can get away with it because the company is taking care of the initial deduction. But till the point of deduction only, employee is safe. Then the second stage also comes where the employee sells the share. When the employee sells the shares, like in India, there's a capital gain. Like for Indian shares, there's a capital gain which needs to be calculated. And that tax has to be paid by the employee himself. So these two stages is what we need to be very careful about. Then another very consistent term, what you will be hearing is FMV. Of course, fair market value, we know about fair market value, but still a fair market value is slightly different because fair market value is something which is the backbone of the entire taxation of ESOPs. Now, fair market value is the value. First, we'll see how it is determined. If it is a listed entity, it could be like Infosys, TCS, etc. in India, or for many multinational companies, say Qualcomm here, but Qualcomm Limited is there in US. Whichever shares you are getting, if that is a listed entity, then whatever value is at which it is being traded, that is the fair market value of such shares. But it is also possible that the shares are not traded regularly and it's a closely held company or something like that. In such case, as you need to obtain a valuation certificate, and this valuation certificate has to be obtained only from a merchant banker. Like any other person cannot give the value of the shares. So every time what happens is you need to see that there is a value which is determined by the merchant banker. And once the merchant banker gives the value of that company shares, that value holds for 180 days. For the time being, let us not worry too much about the merchant banker valuation and all these things. So here, two things you remember. FMV is something which is the base for taxation, because when I'm getting 30 shares, 100 shares, 200 shares, look, I'm not paying anything. I have become the owner. How should I pay the tax? Then they say, whatever shares I'm getting, that into fair market value is the consideration or the salary what I've been received, and I have to pay the tax. So fair market value for the purpose of taxation is important for us to calculate and pay the tax. So these two things, one is 2 stages, it is levied and fair market value, either the listed price or the FMV merchant banker price is what we look into. Then we will just see taxation of RSUs. I would like to go slightly detail in taxation of RSUs and I'll skip ESPP and ESOPs because the calculation is more or less the same. Now what happens? First, which is the first effective date for RSU? For RSU, the effective date is the vesting date. So the first taxation hits you on vesting date because you have become the owner on vesting date. And what is the value for the purpose of taxation? We need to have some value based on which a tax is levied. Now the value is fair market value of the number of shares I am allotted. That is the value for the purpose of taxation. And how is it taxed? It is taxed as perquisite by employer. And as I said, it is a responsibility of employer. Employer simply cannot allot you shares and say, I have forgotten. Yes, the employer can do that because we have had cases where the employer simply said, I don't know how to cut the tax. But remember, even in such cases, the responsibility to pay the tax is on us. We cannot take a shelter saying that my employer did not pay the tax, so how am I bothered? So let us not get into that. But for the time being, you please understand, it is the primary responsibility of the employer to calculate the fair market value of the shares allotted to you and treat it as perquisite, route it through your salary income, and whatever slab you are in, you need to deduct the tax. So I think this is a simple method of taxation. But now some complications are there, which we can see with the help of this example, where I'd like to also share a couple of things here. Okay, so now I have given an example where what is happening is on say 1st January 22. Okay, on 1st January 22, A is granted 100 shares. Now, what happens is I have granted him 100 shares with a condition that 25 shares will vest on to him after every completed year. So what is happening? The first completed year is 1st January 23. And I'm just for example, I'm assuming that the market value is $20 per share. Then this person has sold the shares on 15th April 2023 at $30 per share. Deliberately, I've taken to next financial year. But even though you would have sold the shares on 31st March or before that also, heaven should not have fallen. I just took it to different year, that's all. Now let us see what is happening. Shares offer are 100. Date of grant is 1/1/22. We are not bothered about the total 100. We are not bothered to do anything on 1st January 2022. But the first date, 1/1/23, is the date of first vesting. So in financial year 22-23, there is a first vesting which has happened and the taxation hits us. For how many shares? For only 20 shares and not, only 25 shares. Not 100. 100 has got nothing to do here. 25 shares is what I got. So fair market value of the share, which is $20. So what happens is 20 into 25, $500 will be my market value or my income, what I got, which I need to convert it into this one, INR, and then offer to tax in India. Now, what is happening, friends? Here, it's a very important thing. And many of us who are working are filing returns for this ESOPs also are committing a mistake here. And the mistake starts from employee. The moment you ask him or her something about ESOP, that you don't talk about it. My employer has taken care. As if we are asking him to write the shares on our name, the response comes. So first thing, we need to be very clear. We need to take the details. Now, what happens is, in the example, if you see, $500 is the value of perquisite, and assume I am on 31.2% slab. My income is above 10 lakhs and below 50 lakhs. So I'm at 31.2%. So on $500, I have to pay $156 as my tax in India. Now, what happens is, here these companies play to the brains of the employee. They play to the sentiments of the employee. If I completely allot 10 lakhs, 15 lakhs shares to employee, where I am not giving him or her any money, but I am taking, say, only take 10 lakh worth shares. He is getting some paper. He is either angry or happy, we don't know. But he is definitely angry when I recover the tax. The salary gets into negative, or there could be some problem where I have to ask him to take the money. So to counter that, what these people do is 31.2, you cannot sell 31.2 shares. 32 shares are directly sold. If you are in 20.8%, 21 shares are sold, 35.98, 36 shares are sold. But please remember one thing, next rounded off value shares are sold by the company outside India. And only, so 100 shares are allotted to you, say, 32 shares are sold, and only 68 shares are credited to your account. The employee doesn't know anything about the 32 shares. He says 68 shares I got from the company. And you ask him how many times, he'll say, I did not sell anything. I don't know. But please understand couple of things for this here. 100 shares are allotted to me, and it is my 32 shares which have been sold by the company. So definitely the transaction of sale has been done by me. Same day, two transactions are happening. Shares have come to me, 100 shares, and I have sold. In fact, sir, don't talk about it, because I'm very much worried if they talk about the same day transactions and all. So much income tax department doesn't know. But yes, unfortunately, I only hope that they don't bring intraday trading there. So far, they are not done. So let us not talk into it. But what happens is, same day, 32 shares have been sold. And look, what is happening actually here is, that day, the listed price or the FMV at which I have calculated when the shares are being allotted, it could have been a daytime, and they would have taken 22 rupees 50 paise. Okay, I'm just converting into INR. At 22.50 rupees, they would have just taken the 100 shares and given me the shares. But when they actually sold these 32 shares, it need not be 22, that same price. It could be 10 paisa, 15 paisa, 10, 15 cents more or less. So invariably, there is a capital gain or a capital loss which is being affected. Now, while giving an example, very easily I'm giving you a small amount, but when you look into dollars and all, it's a huge amount. It could be some 22 lakhs, 35,300 shares, worth shares sold. 22, 35, 325 rupees is the cost price. So 25 rupees is the loss. 25 rupees loss doesn't matter, but what is not declared by us in our return is the 22 lakhs 35,000 some rupee. The total value, we are not declaring it in the return, which might create a problem. So whenever there is a ESOP found in share, please be aware that there is a capital gain calculation which is coming. So first, the value, as I told you, the two things I'm going back though. There are two responses. One is, as per the perquisite taxation is concerned, on entire 100 rupees, he will calculate the value, take it as perquisite. And on the 32 shares which has been sold, there will be a capital gain or capital loss. And every time what happens, what these people don't know is some 300 rupees, 800 rupees, 900 rupees will be credited to their account, which they don't want us to tell. But invariably, when the shares, 32 shares are sold, to recover 31.2, definitely some amount is given. If you can take that amount, how much he has been given, automatically you'll get the complete picture in front of you. This is what is happening. So please, whenever for RSUs on the vesting day, there is an FMV perquisite taken care by employer, but as a chartered accountant, we need to declare capital gains and taken by employer. So that's why I use the example for sale of shares. On 15th, he sells these shares at 30 per share. So what is happening? When he's selling the share, if you see, he is not selling 25 shares. Because from the 25 shares allotted, 8 shares were already sold on 1/1/23. So the shares remaining with him are 25 minus 8, only 17 shares. So when he sells it down the line, he has to sell 17 shares only, where the cost is nothing but the FMV on the date of allotment. Now here also, there are a lot of controversies which are happening, friends. There are more than one opinion. So I was just talking about a couple of controversies. One, I say many of us are not bothered about capital gains. And the second thing, what many of us are not being bothered about is how to calculate the capital gain. Now, in this example, it is clearly a short-term capital gain. You are not bothered. You'll straight away take the FMV and do it. But if the same thing would have been, say, 3 years, 4 years down the line, it would be a long-term capital asset. Being a long-term capital asset, you get indexation and everything. Now, the one method, what is happening is fair market value. Suppose the same shares are sold in 27 at some price. Then cost to me is the fair market value, which is $20. I would have converted into INR and then I would have indexed it. From that, I would have removed the actual sale consideration using the INR value in 27 and offered to tax. But some sect of people, chartered accountants, when I'm discussing with them, what they're saying is, no, your method is completely wrong, they say. They say, boss, $20, you just index it. Don't convert it into INR. $20 you index there. The sale price dollars is there. That you can, and that's how from the sale price, remove the index price of dollars and then offer the gain to tax. I feel it is not a correct method for the simple reason the cost is determined as the fair market value offered to tax at the time of allotment. Perquisite should be the cost. It may not be. In RSUs, I agree with you, perquisite should be the cost. But what is happening is, some of us are following the practice of indexing the dollars. Look, logically, if you go legally, the sentence says the amount of perquisite is the cost, you cannot do. But how can you index the INR value to US dollars? The Indian inflation, you cannot keep to that US values. So please don't do that. On the day of purchase, 20 into 17 shares into INR on that date. The rate of exchange should be, when we are doing like this, when we are indexing at dollars, what is happening is we are conveniently eating away the exchange gain and loss. The capital gain is much lower because we are not, because that day the value is only 41 rupees per dollar. Today it is 75. We should convert that into 41 and then index it. We are not doing that. We are straight away dollars we are doing it, which is creating a problem. So don't do that. Fair market value, what is offered, as he rightly said, as to perquisite, that can be indexed and done. So this is the common mistake which many of us are. Yeah, see, in all, for like how we have Zerodha, Carvi and all, the employer has got, you sign bunch of papers in which you authorize the employer to sell the shares. So using that authorization, he will sell the amount of shares required to recover tax from you. No, bank account, it doesn't come. See, what happens is he sells 8 shares. He will just give it to payroll saying that this is Deepak Ladda's tax, kindly pay. It is just routed through your Form 16. It doesn't come to your bank account, but the perquisite comes as income in your Form 16. The tax which you are paying will be directly deposited through the sale of 8 shares and put into your Form 16 as tax paid. Pardon? Yeah, that's what I said. No, even that 8 shares has capital gains, which none of us are bothered to do. No, Form 16, how can they say? See, what is happening is capital gains is separate, taxation of salary is separate. So as an employer is only bothered about taxation. Yes, this is where we need to check with them about the capital gains, declare in the return. Yeah, it need not be. It need not be. But there will be statement. If you ask them, they will give. First of all, your employee is not bothered to reply to you. If he is bothered, his payroll won't be bothered to reply to him. If his payroll will be bothered, that person who is handling the RSPs will not be bothered. So we are also getting only from director level people, but not below. Yes, ma'am. Yeah. Yeah, on the date of sale only, you have to consider the exchange rate. The dates of sales are clearly given. It happens on the same day, as I said, forget intraday, but it happens on the same day. Second, no? Yeah, no, you should take on the date of sale, not the money credited. Yeah, but yes, see, what is happening is, you rightly said, I am also taking the net consideration because this is the money what I got. If there is some exchange difference, it is being taken care of when I am doing it at this particular way. You rightly pointed out the money credited is what we have to take it for the sale of subsequent shares. नहीं आके INR में कन्वर्ट होके अपने NR में आ जाता, कन्वर्ट होके आ जाता, हो जाता. They'll also charge some bank charges and all that. I am taking it as expenses incidental to transfer. See, it's wrong, but yes, because I sold the shares, he has paid me the money and he has collected it, so I am taking. And then say expenses. Yeah. Other countries, because there's a DTA in which at least we are residents here, no? So they are taking care of it. Luckily, we are not asked to file any return in US. Actually, for dividend, I'll come to it later on. I'll come to it just later on. So I hope we are clear with RSC, because when we come to ESPP and ESOP, I don't have to explain much. We are just simply tweaking a couple of values and all. So I'm just quickly rushing with RSU. Anything? Sorry, no problem. Yeah, these are generally foreign shares because all these private, Microsoft, Google, and this Qualcomm, all these are giving foreign shares only. Only, not listed in India, only Infosys, TCS, Mahindra, these people are having Indian shares. So quickly, fair market value on the date of vesting is the consideration received. The employer will calculate it, recover the tax from you. This tax will be recovered by selling that many shares outside India. So what we need to do is, while the employer is taking care of the perquisite tax, it is your duty to offer the capital gains by getting the information from the payroll and putting it. This is the basic thing as far as RSU, restricted stock units, is concerned. I'll come to dividend at a later date. I will not like to go much with the ESOP and all, because in the ESOP, only thing is the value for taxation would be fair market value less the amount paid. So I would have, fair market value could be $20, but I have paid $5. So what I'm getting is actually 15, except that fair market value calculation, you will not find much difference because the value per share I have taken is at 15 per share only and not for 20 per share. Because I think we are slightly running behind. So I'm not, I thought I'll just go quickly. If you understood RSU, you have clearly understood ESPP and ESOP, because it's only the FMV that is going to change. What I have paid, we are reducing and then calculating the fair market value for the purpose of taxation. Yes, no, you're talking about the money paid by me, no? On the date of exercise, fair market value on the date of exercise, minus the day you become the owner. Like for RSU, it's a vesting date. For ESOP, it is an exercise date. No, because you still are not the owner. Like Sushil may pay 1,500, may not pay. Yeah, see. Okay. No, what happens is, when you exercise the date, generally it happens that within the same period you get. The moment you pay the money, the shares are transferred to you. It depends on when you are paying, and very rarely it happens that you pay on 31st March and you get it on 1st April. Frankly, I'm not aware of that thing. But what I feel is, exercise date, the moment, the day he paid the money, that would be the date in which he has to pay the tax. Whether you get the shares or not, it would be a huge complication for company also, because if they are giving him in the next financial year, how are they treating the tax? Okay, it could become a major problem. So I don't think there will be delay from the company's point of view. So again, on the date of ownership for ESOP and ESPP, only remember you are paying some money. So whatever amount is paid by you, that would be reduced, which would be an FMV based on which you are calculating the tax. I think the basic terms and all, I'm sorry, I hope I'm clear and I'm not confused you. Sure, sir? Yeah. So what I'll do is I'll not go for these things, because there's something, the notices is also what I would like to discuss, and the weather is also not that good for us. So I'm just removing, it's the same treatment everywhere. PPT will also with this one. Now, this is again a major problem. So far, the company has taken care. Now, what are we as an employee? Are we no, sir, is that like how we have Carvi, how we have Zerodha here, they also have some brokers, which are, I think few famous ones are E-Trade, Charles Schwab, Morgan Stanley, they're there. So they basically run the same way. Only what happens is, we need to have patience to know how to get the data. Entire data is there. In fact, believe me, that pages data is helping all of us in income tax department. Without knowing, they are simply writing submit e-trade statement. In one page, 1/4 of the page is useful to us for income tax, that reply. But each e-trade statement is 13 pages. And there are 8 such statements per year. 8 into 13, all the pages I am taking, printing and giving it to them. The moment is saying like this, ye kya laye bhai, bolta, you asked e-trade, I gave e-trade. Khatam. So actually they are more, but if you can spend time, little bit of time, understanding that statement, the work is very easy, because I'm talking about the first obligation here. Now what happens is, every time you have shares, there are dividends credited into that account every quarter. Okay, there are dividends which are credited to account. You will not get in India. Ask any employee, say, na em raledu. I did not receive anything. How can you say that? But no, they need not come to you. Like how we have mutual funds where dividends are credited to that account. There also, the dividends are credited to that e-trade account. Because e-trade account, like how Girdhar Bhai and Deepak said, it is my account. Yes, e-trade account is your account. The dividend amount has come to your account. So income has been received by you. So the total dividend is your income. But in your account, total dividend will not come, because from the total dividend, 25%, if you have that as an account, or 30% where, I don't know, the PAN number, SSN number. If you have the TIN number or tax return, they do 25%, otherwise 30%. They just deduct the tax and give you. So friends, even when you have 30-40 lakh worth of shares, the amount of tax what you may have to pay will not be more than 10,000-15,000 rupees per annum, because it's only 5% plus cess is what you are paying. 25% $2, some extra amounts keep going there, and you 80 rupees or 100 rupees per annum. Now, that is the interest credited to your e-trade account. It's an interest on bank account. So this interest on bank account and dividends in that e-trade or Charles Schwab account is your income, which you need to offer from income from other sources. And to claim the relief under section 1991, it is very, very A will be filed with income tax department. Now, earlier was to be filed before filing of returns. Thankfully, a clarification has come wherein they said, okay, you can file form number 67A till the end of the assessment year, which dated return. it is very, very important and updated return 67A before filing the return. This is something please keep in mind. For updated return, there is no such time, extended time available. Am I clear? So 67A needs to be filed. Credit is to be taken. Please understand, amount is not much. The tax payable is not much, but the consequences of not declaring this dividend are quite heavy. Then we already discussed the next point, capital gain or loss on that small 8 shares, 10 shares which are sold. Please declare it. Don't ignore these capital gains. Then comes the most important activity, which I did not tell at that point of time, Schedule FA. Okay, there is a Schedule FA which asks us to declare the details of the foreign assets held by us. Now, this is creating a lot of confusions from year one. No one knows what is to be mentioned there. Frankly, I'm telling you, no one knows. Because if you look at the heading, it says value of shares held at any point during the year. Now, when we are talking about value of shares held at any point during the year, it includes the opening balance, it includes the shares allotted during the year, and it includes the shares sold during the year. So now for every allotment where those 8 shares, 7 shares have been sold, even that values has to be mentioned in that Schedule FA. Okay. And the next complication we are getting, first thing is, even those 8 shares sold, or if you have sold any number of shares during the year, even that value needs to be mentioned in Schedule FA. Because the wording says shares held at any point during the year. First case. Second thing, we don't know, or nowhere it is mentioned whether it should be given at cost price or the FMV at which you received it, or the fair market value. Because whenever we are talking about Black Money Act and penalties, they are saying fair mentioning fair market value, then what happens is your actual FMV could be only 2 crores, 3 crores, but FMV could be 5 crores, 7 crores also. So every year when crores are getting jumped and incomes are not being offered, it might hit the AI assessments, what is happening. So let us be safe, do it at the fair market value, but with the humble request and then work for it. Now, only last thing before we go further, what if I don't do? Ask any person in income tax department, 10 lakhs penalty. 10 lakhs penalty. Yes, till this point, because till the point I'm working on ESOPs, ESA, I'm also saying if you don't file the return, there is a 10 lakhs penalty. I will come to 10 lakhs penalty after one slide, because I want to now contradict that, because now the income tax, if I tell you 10 lakhs penalty, you don't bother because I'm not collecting from you. But if the income tax department is telling you 10 lakhs penalty, it could be a problem. So we need to contradict that. Let us see that after some time. We'll just see the tax saving part of it. Because we are talked about taxation, we are talking. Those people give long-term, short-term. They give the complete calculation. Please don't believe that long-term, short-term for India, because in US, more than 12 months for them is long-term, less than 12 months is short-term. So when they give the calculation, they are doing based on 12 months. Only cognizant to my knowledge. But when we are filing the returns in India, it is 24 months. So if the period of holding is more than 24 months from the date of ownership, RSU, ESOP, whatever it is, then it is a long term. If it is less than 24 months, it is a short term. Unlisted in India. Yes, it is there. It is listed in India. STT, both STT listed here now. One nahi hai pay kare. So the first thing is 24. And many of us conveniently forget about form number, section 54F. See, generally what happens is these employees, majority of them are youngsters, and they sell the shares invariably to buy the house only. It is, I don't know, in my experience, at least I've seen majority of people buying house from the sale consideration. So kindly check if the person has purchased any house property, then exemption under 54F subject to other conditions can be claimed, okay, definitely if there is a scope. But we need to ask, because that person will never tell you that he has purchased the house recently. Of course, once he tells you, you will check how many more houses he is having and all these things. But 54F is available, sir. Then the next point, what I'd like to tell you is that indexation benefits can also be claimed. Many of us are not claiming, but when we are claiming indexation benefits, again, FMV at INR rate on the date of purchase, that needs to be indexed and brought for or EE. I don't know why they are keeping that section there. 54 EE, EC you can't do because EC is for land and building. EE is the only thing available, but no bonds have been notified. So it is creating a confusion. They are thinking 50 lakhs can invest. Please note, it is not for loss. The foreign gains can also be claimed because ultimately income from capital gains or loss from capital gains, you can claim it. Things you remember, sir, when you became the owner, RSU, exercise date for ESOP, that 6 months period or whatever period for ESPP. The day you become the share, there will be taxation. Employer will take care, but you have to go for capital gains. That you need to pay the capital gains tax. Lastly, dividends are to be taken care. Form number 67A is to be taken care. All the subsequent things we are doing it properly, except that we are not understanding the terminologies and faltering on the dates of calculation. That's why it took much time. I was earning much. Frankly, I don't want to hide you. As a conclusion point, I wanted to just tell you the same thing. Don't charge less than 10. Is saying that taking 4,000, this fellow is taking 5,000. Okay, go there, but he's again coming to me only. Why, boss? I'm not that smart. Okay, why are you coming to? Because everyone is charging. So please don't do a lot of work. It is not that this can be just done in few minutes. Don't treat it as any other form 16. So please charge, sir. Great opportunity. At least if 10 returns you do in 2 days, 1 lakh rupees, I think it's a good amount for 2-3 days. If you don't charge, you'll never get interest. If you charge, you will read. The moment you read, you get into complications. You'll go to your friend, you'll call me, you'll go to another senior, you'll learn the subject. So another benefit of is learning the subject. Now, yeah, yeah. After July, August, statement डाल के छोड़ दे रहे क्योंकि what proof we can give that one no, that won't work because that is for yearly financial year. What we are filing here is, sorry, that is calendar year, we are doing for financial year. So that statement we are putting it in Excel, and that one page we are attaching it as a proof. Yeah, it is FIFO method. Yes, sir. Anything in DMAT, it has to be FIFO method. That is clearly clear. Yeah, anyone? In the E-Trade only. It will not come in your 26S. It will not come anywhere. In that E-Trade statement or Charles Schwab, they'll give buy dividend to withholding tax. Like accounting entries are same. Both you will see simultaneously. They have to, madam, to 67A. And that statement where it is visible that so much tax is. No. Because see, Indian, what happens is they sell it directly and they do it. But if these companies are selling because without paying you money, if I take money from you, even if I give you 1 crore rupee shares here. I'm giving you paper, but I'm recovering 30 lakhs from me. Are you happy? You will be angry on me. So I can't afford to make you angry. I will only say, boss, take 70 lakh shares. You are happy. 70 lakh mil gaye, khatam, ghar pe jata. The moment I say, give me 30 lakhs, you are angry. So all these companies are resorting to this. They don't have to ask you. And we can't afford to bring your salary into negative. Enough. Salary won't be enough. Correct. That's why they say. Yeah. Okay. Shall we just go to next point, sir? I think, thank you, Banana, for being here because he is my tax guru, tax consultant and all. So I just forced him to come here because whatever, if I tell something wrong, he is responsible. Okay. Now, we are receiving a lot of notices about disclosure. I have dealt with about 10 to 12, but every day time I am going there, I'm meeting at least 15, 20 new friends. All are very worried, cursing them like anything. What is this? It is injustice. They are only talking that much. Why are they talking? No one wants to say anything. But this is become a trend. I heard Income Tax Department has issued more than 500 notices as a test case, and many more will follow. So what is happening? Now, everyone you ask, right from the chaprasi pune to DCIT, 10 lakh bus, sorry, 10 lakhs penalty. You do this mistake, 10 lakhs penalty. Why? Then actually, in one case, I'm telling you one example, which mistake I only committed. This person has a bank in Singapore. Every year I have filed, but in the year of COVID, what had happened was he had earned huge crores of monies in 5 days for F&O. So I got more carried away with his ability to earn that 5-6 crores in 5 days. And I was also surprised that he lost 7 crores in the next 10 days. Okay. So all this, I was a bit confused. And when I don't know what happened, the value, calculated value is written there, but I forgot to put it in FA. Next 4 years I have done. Earlier also 2 years I have done, sir. He says penalty only. I said, why penalty? Because I have disclosed. Everything is there. In 1 year, I not disclosed. No. 1 year you are not disclosed, penalty, 10 lakh rupee. Then I said, show, give me show cause. How you are? Which act? Black Money Act. Nahi malum tumko. I said, nahi malum. मेरे को black money है बोल के नहीं मालूम ये. Okay. So first secret I'm telling you, I hope no one is from income tax department. They don't know. They don't know what is this. They are also not sure. They know about some 10 lakhs penalty. But how to levy, what to levy, they don't know because they are not bothered to say. Someone said 10 lakh dal do ye logon ko. 10 lakh dalna hai. So let us just see, because see, this is where I want you to understand. Again, I am not the final authority. I am slightly confused still with one section. But all other sections, I am damn clear. I am sharing with, because the moment you are aware of these things, you can cross question them. Don't worry about it, sir. Especially for RSUs and all, don't worry. Why I will tell you right now, after some time. Now, this Black Money Act 2015 came, sir. Okay. So what does this act said? This Black Money Act is to deal with the black money. Okay. Black money, which is undisclosed foreign asset. I'm very clearly talking about this black money is talking about undisclosed foreign asset. Let me emphasize the word undisclosed foreign income and assets. We will see what is this undisclosed and all. The procedure for dealing is also given. Okay. And then it is providing for imposition of tax. So what does the Black Money Act says? It just wanted to deal with the problem of undisclosed foreign income and assets and the provision to talk them. So we are very clear. So now to understand this, what we are supposed to know is what is undisclosed asset. You are given the Black Money Act. No. So in Black Money Act, you are again giving the definition, what is undisclosed asset. So there, they are very clearly said, an undisclosed asset located means all these things we'll just ignore. See the word, he's an owner or a beneficial owner, and he has no explanation about source of investment. So undisclosed outside India, either in his name or where he is a beneficial owner, for which he has no explanation about source of investment. I got one house in US. Katam. How I got, I don't know. The Trump called me and said, you have a house in US, take rent. Okay, that's a ho gaya bas. So then it's a black money. Okay. So, and the explanation given by him. Now, the IT is definitely going to ask me, you have a house. I'm going to give an explanation how I got the house. And again, it says, having the house itself is not a problem. The problem is the explanation given by you is not satisfactory in the eyes of assessing officer. So, TK, undisclosed asset means what, sir? There is an asset outside India for which you cannot offer any explanation. Okay, because we will come to it one by one, sir. And then foreign income asset again means undisclosed income for which you don't have any explanation. So just to, again, because it's an important definition, undisclosed asset is what? Held by the SSC in his own name or in which is beneficial owner, and is there. He has no explanation about source. So this one, no explanation about the source is what? Please keep in mind, remember it again and again. I will come to explanation and all. Then even further, again they said, this undisclosed foreign income and asset should be computed. This is located outside India, and that can be computed only as per the of section 5 of the Black Box. We understood. But again, for levying the tax, he says it should be as per section 5. What does that section 5 say, sir? This 5, which has been assessed to tax under Income Tax Act. Now there is an asset. We will go with the example, sir. If we go with the example, it will be more clear. And why I brought it here, though I avoid controversies, is there is a reason. Now suppose an asset is there. You have a house. You declared it, or you had sources in, say, 2019-20, but 2021 you are not declared, 21-22 you are not declared. These people are conveniently saying every year you have to pay penalty on that. But it is not like that, because they say you can levy penalty. It is undisclosed only as per section 5. And section 5, let us see the example. A house property located outside was acquired by SSC in 2009-10. Again, the SSC in 2000, you bought it in 2009-10. He comes to know about it in 17, 18 is your undisclosed income. It has got nothing to do with what you had in 2009-10. So here, what again they have said is, okay, you have never declared a foreign asset, or you declared in 2009, then you had some source of income. But now what is happening? In 2017-18, the ITO came to know that you have a house outside India. So the market value of your house is 1 crore. This is the value of the amount which bears to the value of the asset on first day of financial year, the same proportion as assessable or assessed foreign income bears to total cost. So what we did in the example was 50 lakhs house you purchased in 2009-10. Just an example, 50 lakhs you purchased in 9-10. In 17-18, the ITO found out, Eureka, tumko 1 crore ka hai ghar. Chalo bas. So 1 crore undisclosed. I said, no, it is not like that. So what happened in those days was 50 lakhs was the property. I declared 20 lakhs income. So 20 lakhs is already declared. Now that value has become 1 crore. So, okay, 1 crore you take it. But the proportion of that income, what I declared earlier, you cannot treat it as undisclosed asset. So though 1 crore is the value, 1 crore into 20 by 50 lakhs, that is the proportion I am calculating. Though 20 lakhs was disclosed, 40 lakhs is already disclosed in the same proportion, and 60 lakhs only is there. Neither I understood nor you understood, forget about it. What I want to tell you here is one thing. They cannot charge the same value again and again every year. If I already declared the value of the asset in a particular year, and you might have not declared declared it. After some years, I have stopped declaring. When you find out, the law says fair market value is taxable, but it is not fair market value is taxable. Fair market value minus what I already declared is taxable. Why I spend more time in this is, I told you about my own case. It is 1,72,00,000 some rupees. Every year I am declaring it with some 100 rupees change. That year only 20 rupees got added, interest. But he wants to charge 1,72,00,000 as undisclosed only. So this is why I had done a lot of studies here. So I'm very thoroughly convinced that what I had already declared, he cannot treat it as undisclosed asset. So please, many of you, many times might come into situation where he wants to tax every year. Please take a stand that once it is declared or taxed in a particular year, you have to give me rebate of that particular thing. This is what I wanted to talk about section 5. Then there are 3 sections which are playing havoc with us. I'll just close in another 10 minutes. 3 sections which are creating havoc. Section 41. What it is saying, the assessing officer, it is penalty in respect to that undisclosed foreign income. Now we have thoroughly understood that undisclosed foreign asset or income is something which you don't have any source, any explanation. Now, what 41 is saying, the assessing officer may direct where tax has been computed under section 10 by penalty, in addition to tax, a sum equal to 3 times the tax computed. So it is not only 10 lakhs, 10 lakhs comes later, but whenever there is an undisclosed asset, there is a tax plus 3 times of the tax as penalty. But what is this section 10 saying and how we are safe is what now I am going to tell you about this. The entire exercise of coming in rain and talking is only to tell you about this section. Here, what section 10 says is, of course, let me not read the entire thing. What is in yellow, let us read. So after receiving the information, the SSC will serve on any purpose, any person notice requiring him on a date to be produced or such accounts or information. So first, the officer, after getting the information, will write to you, I have found out that you have, kindly explain me with various books. I think all of you are getting the notices, would have been getting this particular letter. And once he get the third point, the assessing officer, after considering such accounts, documents he has obtained, and after taking into account any relevant material, shall by an order in writing assess or reassess the undisclosed income and asset. So what is he saying, sir? The section 10 is very clear in one thing. Was any undisclosed asset you find, it cannot be your income for me to tax. I have to check from you whether it is disclosed, not disclosed. Banu, I just correct me if I'm wrong. What is happening, sir, is schedule FA, when you are not giving some value, they're saying it is undisclosed. Okay. The moment it is not there in schedule FA, the income tax department is jumping to say it is undisclosed asset. So kindly pay 10 lakhs plus whatever penalty is there. So far, what we have seen is that the assessing officer cannot say it is an undisclosed thing, because for treating anything as undisclosed, I should not be having the source of that investment. So here, I feel the moment I give them the source, it is clearly disclosure is over. You cannot say it as disclosure. Now, what I am saying is that Schedule FA, writing some figure in the Schedule FA is only a procedural or technical deficiency. How can they take the technical deficiency under income tax return and bring the Black Money Act provisions and levy a penalty of 10 lakhs on me? So here, what all of us need to understand is, once you are able to explain the source, it is done. Now, an interesting thing happened with me. In one of my clients' case, it did not bother to put anything. That was the first year. ESOPs are not put. Nothing has been put. ITO said you are not disclosed anything. So this is your foreign asset. You are not brought it to our notice. We don't know. Suddenly we have found out. I say, boss, two things. Once it is an RSU, I have a clear explanation. It has come to me. It has come in my Form 16. And why are you saying I did not tell you, did not tell you? Who gave me Form 16? Traces only gave me Form 16. No, Traces is Income Tax Department. You only tell me I have so many assets, and you only are telling me you don't know I have so many assets. What is this? He says, how can you talk like that? I says, I don't know, sir, because you are talking like that, I am talking like this. So let us forget about Form 16, but let us not treat it as undisclosed. Section 10 clearly close it. Yes, sir, I had a house outside India. I never showed it in India. I have rental income outside India. I never showed. Yes, that I agree as a undisclosed for 1 year. But every year for RSUs, he cannot tell me the same thing because it is disclosed. It is disclosed in my Form 16. It is taxed. It has been routed through my Form 16. So Section 10 clearly avoids the penalty under Section 41, because 41 penalty can be levied only by Section 10. Section 10 says if you are able to explain through the Form 16, through the employer, 41 is ruled out, sir. 42 is slightly strange. 42 also is there, sir. 42 says penalty for failure to furnish return in relation to foreign income and asset. Look at the heading. There's a great controversy between heading and sentence. Heading is talking like this, but if you look at the section, the penalty can be levied only fails a person. Okay, he had any asset, was beneficial asset, and all these things are there, and fails to furnish the return of income before the end of relevant financial assessment year. Sir, I have filed the return of income, sir. You are only saying you will put penalty on me if I don't file the return of income. I have filed the return of income. So where is the question of penalty under 42? Your heading says like that, but your total matter and all is only saying, do this thing, file the return of income. The moment I file the return of income, all my sources, everything is there with you. Penalty under 42 also cannot be levied. I'll come to it. Updated ka. So today I have filed, I have not disclosed it there, but I have filed the return of income. The moment I filed the return of 42 also cannot come. 41 cannot come because he has to call me for books. I will explain him. He cannot do 41, 42. Now the last section, Bananaran sir, I need your help. Now the last section you say, 43, which is talking about penalty. Penalty for failure to furnish in return of income and information or inaccurate particulars about an asset located outside India. Now, unfortunately, I will say unfortunately here, he is talking any information about any foreign asset. 43 is dampener for me. Because 43 is not using the word undisclosed, 43 is not using the word anything. But 43 says, if you have any asset outside India and you don't file it in return of income, then there is a penalty of 10 lakhs. This will slightly a black money act section. So you can bring any penalty on me which is a black money or an undisclosed income or an undisclosed asset. So how can you just simply say where my tax paid money, if I fail to disclose or commit a technical deficiency in income tax return, Schedule FA, how can you take the shelter of black money and put me a penalty of 10 lakhs? So here there is my contention. I may be wrong. One, you can add anything if you want. My thing is what? Black Money Act, this is there. Income Tax Act, that Schedule FA is there. So here when you say don't do anything, it's only my black money not declared, you should put me penalty. You cannot take the shelter of Black Money Act to tax me under income tax. But still, as on today, at this moment of time, 43 is our weak wicket. I asked them, I wanted to fight on the same line. I'm Shokas. First, he became very generous and say, no, this is a draconian provision and the budget law just the clarification. In budget, they are going to change this. I laughed, budget budget rally. Then again I went, sir, notice, sir, nak notice and Shokas and why you are living to no, Andy, mem alochistunnam dan gurinchi. It's a massive discussion happening. We feel it is very unjust. I don't know. Income tax officer not jumping to levy penalty, stating unjust, something themselves confused about these things. They only are made to buy her 10 lakh penalty, 10 lakh penalty, 10 lakh, which they are repeating it outside. But if we fight it properly for RSUs, for asset declared, I don't think we will fear anything. If you have a house, you went to US to study, you open bank account there, or you purchase house, you are getting income, you are not declaring here, it's a problem, sir. But the ESOPs, what you are having, if you don't declare, I don't think this penalty under Black Money Act will stay, but I think leaders should definitely talk to the people. I did not write Q&A because I'm not capable of answering your questions. So I said group discussion. So if we get a question which